How's it going, everyone? Spencer Israel here with Brent Slather from our Benzinga news desk here in our downtown Detroit newsroom. Today's video brought to you by the Benzinga FinTech Awards. Next week, May 11th, in New York City. To learn more, go to bzawards.com. Today, we're going to talk about a common trading and investing idiom or concept, and that's risk on and risk off. If you follow the market, you know that we're at about all-time highs in most of the major indices. The VIX, which you can see behind me, is the volatility or fear index, is near all-time lows. So you wanted to take that as an opportunity to explain what risk on and risk off actually means. So Brent, what is risk on and risk off?
All right, risk on, risk off describes price responses based on an investor's perception of current risk in the market.
What does that mean?
Okay, so risk on means an investor wants to put more risk into their portfolio. Risk off means an investor wants to take risk away from their portfolio. They're concerned with the current level of risk in the market. They want to remove some of that risk from their portfolio.
So how can traders maybe take advantage of risk on and risk off?
Well, a risk on, risk off day can happen any day. It pops up when there's, I would say, a bigger news item. I would say the bigger, the broader the news item, the more sensitive investors are going to be to risk. If it's a geopolitical issue, if it's a big macroeconomic data point, that stuff is going to really impact how investors are perceiving risk in the marketplace.
So as a trader or investor, how do you identify whether a day will be a risk on day or a risk off day in the market?
That's an easy one. It's the VIX. The VIX is a really good indicator of risk in the marketplace, of fear in the marketplace. A little bit of context here. Like you said, the VIX is at near an all-time low. It's around 11 or 12 right now. Going back to the Great Recession in 2008, 2009, the VIX was around 80 or 90. So the lower the number on the VIX, the less risk. The higher the number on the VIX, the more risk in the marketplace.
Another way is to watch, if you can on your platform, pre-market trading action before the opening bell. If you see a positive headline or negative headline and the stock not respond accordingly, that could maybe give you a hint as to whether it'll be a risk on day or a risk off day. Last question, Brent, before I let you go, how can people maybe play risk on and risk off?
Sure. So when risk is on in a marketplace, you want to be trading higher PE stuff. You want to be trading higher beta stuff. When risk is off in the marketplace, that's when you're going to go to more of your blue chip plays. You're going to go to the dividend payers. You're going to go to stuff tied to discretionary spending a little bit more, that kind of thing.
All right, makes sense to me. For more videos like this, tune into our Benzinga TV YouTube channel at BZTV. Don't forget to like, comment, and subscribe. And if you want real-time news to see what Brent's working on all day, check out benzingapro.com. For more, he's Brent. I'm Spencer. Have a good one.